In this video, I'll explain the three most common reasons why people's mortgage applications are declined and how to avoid them. Sell their house. So, just going to go through a few things on how to get the very best deal. So, I can help you negotiate the very best price possible. The reason why I can do that is because I do this full time. Most people buying a house are doing it in between working, family, going to school, whatever. So that means the hours that you are at work and the estate agent is at work, that's when the negotiation would take place. And it's not always convenient for a buyer to be able to, go off into a room and talk about their personal finances. So it is good to use a broker to do the negotiation. I will say that most estate agents don't like that. Most estate agents don't like the broker doing the negotiations, but that's just too bad for them. One of the reasons why they don't like the broker doing the negotiations is because they know that the broker is going to be a lot more skilled than the client. Best tips. So one of the tips for getting a mortgage I would say, check your credit file. Check your credit file, I would say 6 months before you're ready to purchase. As someone that worked in collections and pre-litigation for over 10 years, what I have found is most people don't truly understand their credit report or their credit status. I do understand that a lot of banks and a lot of like ClearScore and other platforms will give you a credit score. So your bank will have something when you log into the app that has your credit score. But that is not a fully comprehensive credit overview. So the only the only credit document that I accept, and most brokers, is the one that is generated by a platform called checkmyfile.com. That's checkmyfile.com. The reason why brokers use checkmyfile.com is because it's the three bureau reports. So it's Equifax, Experian, and TransUnion. It will give voters roll history. It will give balances. It will give CCJs. It's a comprehensive overview. As a consumer, you should check your credit report once a year. There's a couple of reasons for that. A, you want to check your credit report to make sure it's accurate. Probably 6 out of 10 cases that I do, so that would be 60%. When the person looks at their credit report, they find something that they were unaware of. It could be a positive or a negative because sometimes people feel that their credit is worse than it actually is. Sometimes it's better than it actually is. And quite often what happens is, especially with couples or people that have had long-term relationships, they may have taken out credit with someone else, and that's formed a link on their credit report, and they've forgotten all about it. Or sometimes people have maybe taken out a credit card, used a credit card, and just paid it off and not used it for so long that they forget that they actually have it. And that can cause a problem when you're doing your application because banks don't like what's called non-disclosure. So non-disclosure is when the credit application is being completed and there's something that's on the credit file that is not on the mortgage application. So that's why you, as a consumer, at the very beginning of the process, before you may even have all the money to make the purchase, what you want to do is check your credit report. Any missed payments or late payments, you want to try to tidy up. If you have small balances, like if you have a credit card and it has a, 89 pound balance on it, and you can afford to pay off all of the small things. Don't close the accounts though. Okay. So don't close the accounts because that will affect your credit rating sometimes adversely. So pay off all the small things that you can that will give you more affordability when you go to get your mortgage. I would say even if you've got missed payments or CCJs, that's not going to prevent you from getting a mortgage. It will just mean that you'll probably pay a higher interest rate and there'll be fewer lenders that you can go to. But if you go to a broker, there's lots of lenders who will lend money even if you have missed payments, CCJs, anything along those lines. What they usually want to see, though, they usually want to see that you're now current. So if you can pull your credit report 6 months prior to when you're ready, make sure that you get current on all of your bills and stay current for the next 6 months. That's going to put you in good shape. Now, another good rule of thumb, especially now that interest rates are pretty good on saving accounts, move all of the money that you have for your deposit into one account. There's several reasons why I say that. Reason number one is it's a lot cleaner when you're doing your mortgage application and you have to prove the savings that you have. It's a lot cleaner if you can just send over a bank statement where the money has been there for a while. It's easy to trace where the funds came from. That's number one. Number two is because there's some really good savings rates out there, usually not with the high street banks, usually not with the high street banks. But if you go to Money Saving Expert, you can find some really good competitive savings rates. And you know, if you're on Money Savings Expert, that you're getting reputable banks that are all guaranteed. And depending on how much you have for a deposit, think about it this way. Let's just say you're one of those lucky people that has a lot of cash to pay down on the property. Let's just say you put £80,000 in a savings account. You're going to be getting interest on that every month. And because you don't actually use that money, so you don't actually pay that deposit until quite far into the process, and because the average mortgage takes about 6 months to complete, that means that money will sit in there and be gaining interest for about 6 months. So it's not going to be tons and tons of money, but it can be enough to offset some of your expenses. Now, do keep in mind that there's a cap on how much interest you can earn each year. So I'm not giving you financial advice in that sense, but I am just giving you some practical advice, and you can crunch the numbers to see how much you will actually earn in interest by putting it all in one place. Another tip is clean up all your credit cards, pay off small debts, ensure all credit cards are managed responsible, and cancel any unnecessary direct debits. So let me be clear. I'm not saying close cards or revolving credit cards, but if you have like direct debits and you don't need that particular product, service, or subscription, cancel it. And as I said, we're doing this 6 months before you're ready. That way, when you go to do your mortgage application, you'll be able to maximize the amount you get because you'll be able to afford more of a repayment. Track your spending closely, lending leading up to and during the buying process. I've seen some people do this. They do the mortgage application, the mortgage is in process, and they start applying for other credit. Don't do that. So until you've moved into that home, you're settled in, don't apply for any more credit. Lenders don't like to see that. But also keep in mind, when you get that mortgage, you will probably see a dip in your credit score. There's a couple of reasons. One, you now have a huge loan on your credit report. And then the second reason is because you're going to be changing addresses. And one of the things that impacts your credit score is the length of time that you're at your address, being on the voters roll, etc. Keep in mind, especially if you're someone that's been renting, owning your own home is expensive. One of the benefits of renting is the fact that if something breaks, the landlord has to take care of it. When you own your own home, you're responsible for everything that happens in the house. So don't forget about expenses when you move in, but also don't forget about the expenses of actually getting a mortgage. So understand they're not hidden costs, but additional costs. So stamp duty. And make a note to yourself, guys, the stamp duty is reverting to pre-COVID levels as of March of 2025. So if you're a first-time buyer and you were counting on a lot of the first-time buyer stamp duty discounts, you probably missed the boat because you'd have to complete your deal before March of 2025. Okay? So don't forget about stamp duty. Don't forget about legal fees. So the solicitor is going to charge you for searches, etc. And these are expenses that are going to come out of your actual pocket. All right. So these aren't expenses that you can roll into the mortgage. These are expenses that you're going to have to pay. These are hard costs. So make sure that you have that money available. Also remember that it's going to be a little bit more expensive to do a leasehold property than it is a freehold property. So if you're buying a house, it's usually freehold, and the legal costs are a little bit less for freehold than leasehold because leasehold is a little bit more time consuming for a solicitor. You're going to have your moving costs, potential repairs, and renovation. Building a strong financial profile. So it's important to maintain a steady job and income. So one of the things that lenders are going to look for on the application is, are you on probation? How long have you been employed at the particular employer? And how long you've been employed in general. Now, if you're young and you're at the beginning of your career, it is what it is. But banks and lenders want to see that you have some stability in your job. And here's some good news for somebody out there. One of the things to consider, and one of the great bits of information, is that some lenders will do a mortgage based on a job offer. Okay, so you don't actually have to be in the job, you just have to have a job offer, and you're starting within the next 3 months. So you have a job offer and you're starting within the next 3 months. Now, that won't go for smaller companies. So like if it's your cousin's, construction company and he writes a letter saying he's offering you a job, that won't fly. It would have to be with a large company, a reputable company, someone that they can search on Companies House and see that it is a viable company and that, it's not owned by a relative or family member. As I said, avoid taking out new debts or making large purchases during the mortgage application process. All right, so this is basically an overview. So I've gone through the steps. I've gone through some hints and tips of getting a mortgage. I've explained who's involved in getting the mortgage.